Good morning, good afternoon, good evening, wherever you are on this wonderful planet, and welcome to the 10-minute late running Bull versus Bear webinar for TradeDay.com. Steve Miley on the call on Wednesday, the 23rd of March. My apologies, guys. Again, a technical issue with our streaming software. Hopefully we'll get through the webinar today without the stream failing. We are investigating. We're doing as much as we can on this, guys. But my apologies. So slightly late running, but we're here. Just a heads up while I'm here, though. Tomorrow, there will not be a webinar. We are not available to do the webinar, unfortunately. So there'll be no webinar on Thursday, the 24th of March. So webinar today, next webinar, late running webinar today, and the next webinar will be on Friday the 25th. Okay, so nothing tomorrow on Thursday. Right, we're going to run through. I'm going to go through this a little bit quicker than usual, just because of time constraints. We'll run through the calendar. We'll run through some of the articles from the major news wires. Markets are relatively stable and relatively quiet overnight so far, up until today from yesterday. We have ongoing central bank speakers in here, and we have Biden actually in various meetings with European allies, G7, NATO, and some other stuff going on with Biden at the moment. But we have on the data front, we've had CPI data above expectations in here, above forecast from the UK. That was so again, inflation running hot in the world's global economies. 5.9% forecast here, 6.2%, 0.6 on the month-on-month, 0.8. So inflation becoming a real problem. We do have the spring statement from the UK shortly in about just under 50 minutes now, which is where they kind of put out it's kind of similar to the budget, where they put out their spending plans and tax plans and that kind of stuff. So we get this spring statement, not quite the same as the budget, and we're looking for maybe some hope. I'm hoping for some help for the more vulnerable with respect to heating bills, which are surging at the moment. And there's a price rise coming in April, and I believe another one in October. So, but we have further central bank speakers very shortly. We've got Bailey and Powell speaking. Powell, obviously, this week has already stepped to a far more hawkish tone in here, really flagging up potential for a 50 basis point rate hike at the next Fed meeting, after the Fed next meeting in May. And we also got the governor from the Bank of England speaking in, at the same time. So we've got further central bank stuff going on today. Going through for the data, new home sales doesn't really do much to the markets in here. We have crude oil inventories. If you're trading oil, that's obviously going to be important. However, crude oil inventory is really not having a significant impact on markets right now. They come out at 10:30 Eastern time. Daily also speaking from the Fed, and we get monetary policy meeting minutes from the Bank of Japan tonight. Not usually a big market mover. Let's take a look at Bloomberg's 5 things you need to start your day. Well, bonds continued their sell-off in here. So unprecedented losses since peaking last year. Central banks tighter policy to quell urging inflation. So a really significant sell-off in bond markets over the last few days in here. And there's a real risk that continues, obviously putting upside pressures on yields across the board with that big sell-off in here. And then even though a more hawkish Fed and is usually bad for stocks, bad for equities, stocks are doing fairly well at the moment, and up in 5 of the last 6 sessions, the S&P, and I think as we said yesterday in yesterday's webinar, I think the fact that central banks are slightly more hawkish, the fact that they are addressing issues in here is seen as a positive rather than a negative in here. And obviously, even though there's plenty of terrible carnage going on in Ukraine, we haven't as yet seen a significant escalation. Talks continue to go on, and if anything, in some places Russia are in retreat. Biden's in Europe. I've already mentioned that in here, speaking to NATO, the G7, and also the EU. Okay, so you've got a lot of meetings in here, expected to announce further sanctions and also energy aid for Europe. Okay, so that's going to be interesting to see what comes from that. European stocks are slightly lower in here this morning. So worst drawdown on record for global fixed income, worst inflation in decades seen fixed income markets. Remember, bond markets lower. Inflation is damaging for bond markets, right? You don't want to own, you don't want to own a fixed income security that's yielding very low if you've got high inflation, okay? And alongside the threat of stagflation, are leaving markets, the bond markets, very, very vulnerable on the downside. Worst drawdown on record for global fixed income. I think that's drawdown of funds in here. I'm assuming that's going to be. So yeah, certainly a real big negative there on the bond markets, and we've been featuring that recently. And stocks halt rally as bonds stem record losses. So again in here, bonds in here are dipping slightly lower as benchmark treasury yields slip after surging to 2019 highs. I'd say equities creep to 5-week highs, ignoring the bond sell-off. So that was from yesterday, really. And here, but oil's bouncing back higher as well. That's putting a little bit of a dampener. And look in here, US futures slip with focus on US rate outlook and Ukraine crisis in here. So we do have European equity indices. We go and take a look at those in here. Just go back a page. We go look at the European equity indices this morning. We'll see across the board in here, we've got modest losses, not huge losses, down about 0.5 to 0.75% in most places in here. You can see this morning, FTSE actually up slightly in here this morning, but most of the European bourses are lower this morning. And if we go take a look at US equity futures, those are lower. We've already looked at. We'll look at these in a little bit more depth. I've already mentioned it. So stocks obviously had a good day yesterday, up about between 0.5 and 0.75% yesterday across the board. But if we look at the futures this morning, we're down between 0.25% and 0.5% this morning between the Dow, the S&P, and the Nasdaq. So a dip lower there. This is swinging more this way. Our CME Fed Watch tool in here, this column getting bigger and bigger, more chance, after Powell earlier this week in here, more chance now of a 50 basis point rate hike. The market now pricing nearly a 70% chance of us going 50, or the Fed going 50 at their May meeting. Right, let's take a look at some of the charts in here. So it's going to be a slightly shortened, late starting and shortened webinar today. So bonds plunging lower. So we'll start with the bond markets getting all the headlines at the moment. Lower again yesterday, lower again this morning, but has stopped the rot in here. We have had a slight rebound in bonds. Equities having had that super surging moves in here, dipping lower. Now, for me, you're going to be probably a bit surprised to hear this. I think I think there's a real risk that we have a little bit of a downside correction today. We've had this rollover. It's been a steady rollover from overnight through the European session. The market's just been dipping lower. I think we could dip a little bit lower back into this kind of area where with this whole consolidation area. So this is the S&P, somewhere between the breakout, is around 44.64. Down to maybe like 40, somewhere into this area here. I think we could dip into this area today, but then probably look for a swing back higher from that area. So giving back some more of yesterday's gains, but then we are looking for swing backs. I think you can play this from both sides. I think, you can really play this from the short side right now. And then looking for a move down in towards here from where we kind of rallied yesterday, and then looking for it to turn out. So I think there will be another buying opportunity later today, and I'm going to step in a little bit more. If it starts to turn quicker though, then we've got this kind of obvious downtrend in here from this morning's activity. This is on a 5-minute chart now. So you got the this downtrend line. If it starts to get back above here, starts to get back above these peaks in here that we've posted for over the last hour. So back above really, where are we? 44.91 and a half up to 44.92 and a quarter. These peaks here, 91 and gets above 91.92. It's looking bullish again. I prefer to play it, I think, from the short side now, but do watch out for a reversal of that trend line. Okay, if it reverses the trend line, I'd be quite happy to flip back long because the underlying theme is still bullish. But I wouldn't be surprised to see a deeper correction going into the cash market open, and even through the cash market open, looking for it to go deeper, but probably looking for a rebound later in the day. So short, I was kind of slightly bearish going into the open and post open, but then before the close, we'll probably want to be playing it again from the long side. But if it reverses, I think this trend line is going to be key. So, and these chart resistances in the 91, 92 area at the moment. But obviously, if we go low, we're going to get new resistance points to be monitoring. So that's on the S&P. Let's take a look at the DAX. DAX. The NASDAQ, same thing in here, really nothing different to talk about there. Just interestingly, we did just poke above this little swing high in here. We mentioned this from my birthday, 16th of February. That high there was 14,665, and we did nudge above that yesterday up to 14,690, and then obviously we've retreated lower. If we swing back in here to the intraday chart, there's the roll lower this morning. Look, so this is, I'm happy to go with this. Look, string of 30-minute chart in here, string of red candlesticks in here, looking vulnerable. There's the impulsive move from yesterday, and looking for probably to give a bit more of this. On a Fibonacci retrace, where can it go down to? Well, just on yesterday's. If you look at this as just yesterday's up move in here, we're just the 50%. We're just coming down towards 50%. It could get down towards like more than 61.8%. So down towards maybe 14,485, and then looking for this to round up around in here. But at the moment, there's no real sign. Look, plunging lower in this bar as we speak. So definitely playing this from the short side for me, and here at the moment. But watching out for later in the day that we could swing back higher. Let's swing over and take a look at the commodity markets in here. We're going to start off with oil, because it is one of the bigger drivers in here at the moment. So oil rebounding back high. We did have a little bit of a wobble yesterday, rebounding strongly back higher in here. I step into the 30-minute chart. I think you can only play this from the long side. And if this pushes high, it's going to help that downside pressure on stocks in here. So here on the 30-minute chart, I think if you clear above the current peak on the day, the current peak on the day is 112.31. If you clear above there, I think that's a trigger to get long. Could be back up towards the highs over here in here, which we posted up towards 113 from yesterday, earlier in the week, right? From yesterday. So the high there is 1335. So through here up to there, and maybe bigger picture, even going a bit higher than there as well. So up through there, up to yesterday's high, and then maybe up towards like 115, 116 kind of area going into today. So oil certainly pointing higher at the moment. Let's take a look at gold on the daily. Look, it's been paralyzed, absolutely sideways. Down yesterday, rebounding in here today. If I go into the 30-minute chart, make your mind up. I have no strong view in there. Wouldn't be trading it. Just wouldn't be trading it. Okay. All right, guys. Sorry, it's a bit of a quick run through in here today. Apologies for the late start as well. Please remember, heads up, no webinar tomorrow. We're gonna have to have a break tomorrow, so no webinar on Thursday, 24th of March. Returning to you on Friday, the 25th of March. Until then, have a great trading day or days, and I'll be back with you then. Take care.